Okay, so the first question is the potential versus the reality. The last couple of days, we've heard a lot about the potential of RWA versus the reality of it. And Pauline and Rachel, I want to turn this first question to you. Where are we now, and what hurdles specifically do you see ahead of us for the potential versus the reality of RWA implementation in your specific in Hong Kong?
Well, as a starter, if you look at where does Hong Kong stand in global financial landscape, Hong Kong historically has always been top 2, 3 origination and trading center. Last year, IPO is global #1, and the bond issuance has always been Asia #1, 400 million, leading Asia's bond issuance lead table. I think by this time we've seen encouraging signs that leading by Hong Kong government, we've been issuing 6 billion of green digital bonds, 6 billion momentum led by Hong Kong government itself and the various industrial issuers. So that's a huge, I would say that's encouraging asset class improvement. In terms of asset management product itself, we have regional stronger players from all parts of Asia, actually, from Korea, Japan, Greater China region, trying to push out their asset management and traditional products, services on chain. Having said that, asset management brands, you still see very strong competition from the traditional money market funds, mutual fund, ETF funds from the West. So I would say on bond side, we see great potential. What is in the way of further booming of the market? I would love to see a full mobilization of the banking industry. I used to be an origination banker and the capital markets banker myself. I just don't see the broker-dealer origination and market-making coverage people fully mobilized on both issuance and private placement as well as secondary market involvement in, because at the end of the day, right, it's still finance. Whatever technology you put behind it, you need to find a client, you need to communicate information, you need to make sure people know what they're buying. I wouldn't see that it's a tech world issue, it's a finance plus tech issue. So I would love to see the whole society mobilized.
So TradFi needs to catch up. Pauline, what about you? Oh, sorry, Rachel, but what about you?
Does it? Okay, it works now, yeah. So for me, it's more on the compliant sort of settlement for stablecoin, since at the moment, we also see like RWA cases in Hong Kong, but usually you need to subscribe through fiat and potentially settle through fiat, or you have to be like meeting certain conditions. So if, let's say, upcoming, we have like these like licensed stablecoins in Hong Kong, and you can use those for RWA settlement, that would really facilitate the end-to-end tokenization and also settlement of these assets, and that would, I guess, helpful in healthy growth of the ecosystem as well. Thank you.
Okay. Did you want to add something?
Sure. So I think there's a number of things in Hong Kong, and Hong Kong has the most tremendous potential, but you're 100% right, I think, Pauline, that we would need to really mobilize the whole institutional infrastructure, which works so well in the capital markets, so well in the bond markets. But right now, our regulation is somewhat piecemeal. We've never had the comprehensive offering, which I'm sure Irina is going to tell you UAE has, which they do, amazing offerings. We have a great stablecoin ordinance, but unfortunately, there's not one stablecoin approved under it yet. We have gaps. We don't have regulation of custodians, and of course, some lack of regulation may be seen as enabling, but actually when you're looking at an institutional offering and infrastructure, it doesn't tend to be, because institutions want for themselves and for their end clients end-to-end assurance of the proper conduct of all the steps in the digital transaction chains. And I think that needs to be further facilitated in Hong Kong. We also have gaps on digital payment remittances in Hong Kong at the moment. And, of course, there's the big elephant in the room, or perhaps the dragon in the room, of the latest statement from mainland China on RWA, effectively putting massive restrictions on and saying that any RWA offering, whether done inside or outside China relating to Chinese assets, requires CSRC approval. Now, of course, that may not end up being a big blocker. It hasn't been in the main equity capital markets, for example. Those deals require CSRC approval. But I think there's an awful lot of question marks over that, and it's very, very new at the moment, and may be subject to policy stop-starts. And also, China has made it very clear that RMB stablecoins will not be legal. So I think there's a few things in the regulatory chains that need to be sorted out. And I think, given that, Hong Kong is brilliantly positioned because we have the infrastructure, we have the experience, we have the institutions here, and we have access to capital in this market.
Yeah, I'm so glad you raised the dragon in the room, and we're going to get to that in just a minute. But Irina, I'd like to turn to you for a moment. We talk a lot, and this is something that anecdotally, I think that when you get a group of international people in the room, the question is, what is Hong Kong like today? And I get that a lot. I'm often going to conferences around the world. And people want to know, is it still the Hong Kong, the super connector, that global presence that people associate it with? And I've always, coming from New York, I've lived in London, it's one of the great cities of the world. And I say that only for 3 cities in the world. And part of that is because of its history of a financial center. But, a lot of people will also say that Singapore has the liquidity, Hong Kong has the capital. Where are we? What's your perspective? Because you're also sitting in what is, one of the biggest financial centers in the world. How do you see it?
Well, listening to all of this, to the founders who are listening to us, I only have one thing to say. Habibi, come to Dubai. We have regulated custodians. We have banks that are offering stable coins to retail. We have approved USDT, USDC. We have approved AED-backed stable coin. If you want to issue a renminbi-backed stablecoin, you can do it in the UAE under 3 different regulators. Pick one. So we have financial markets going into tokenized securities and tokenized bonds. I know so little about Hong Kong. It's a beautiful city. I've been here as a tourist. Now I came here for this event and listening to, fantastic. I've read the ordinance and I was like, well, that's fantastic. So of course my question was, okay, who has been approved under this stablecoin ordinance? Where can I buy some stable coins locally? And the answer is, we don't have that yet. Is that because of the political situation or a regulatory situation? I do not know, and it's not my place to say this. My turf is Middle East, Dubai, UAE. We have over 80 approved VASPs for retail, not just for institutions. So I think it's the most wonderful place to do the issuance, for example. Right. Maybe that's something that we should be doing, leveraging the capital available in Asia, but do the issuance out of the Middle East. Maybe it's the fantastic bridge that we can now build between the regions. Why not?
I love this. The competition is heating up, guys. Woof. I'm actually excited to hear this because I moved to Hong Kong from France. And France was presumably one of first mover across Europe in terms of the issuance of stable coins and the passage. First it was BBVA, as we all know, in Spain. But there were some big banks in France that wanted to step up too. That said, even a year after they had all the approvals, there was no movement. Nobody was selling them. Nobody was trading them. The institutions that had worked so hard to get MiCA approval weren't even selling them to their own clients or even in purchasing them themselves. So there's that gap between perception and reality. What do you say, Pauline, about, is the gap, does it exist from your vantage point?
I would like to raise 2 points to that. Number one is, if we take a step back about as bankers, as financial institutions, or as fintech company, why are we doing this? Doing a project. Why are we doing RWA project? We do this to create a market if you are doing innovative asset classes. We do this to make money if you're trying to do brokerage of traditional asset classes. Now, when you're trying to make some money instead of just to be a one line on whatever media you're trying to cover, you need to ask yourself where the money is and where is the market that is a tier 1 licensed jurisdiction that your investors are happy with how things are arranged onshore, and where's the money pocket that you could potentially go pitch, and hopefully there will be an asset class coming up that's worth your effort, and eventually you can ramp it up and create a huge size of asset class that's how bankers, right? We hope one day we could create an asset class and we eat from it for the next 5-6 years. Now, the second point I want to raise is a banking relationship, right? Hong Kong, why are we, seemingly a bit slow on things is sometimes, I don't want to get too philosophical or oriental on this, but sometimes slow is fast, right? In fintech, in crypto, in digital assets, we're already past the stage of crazy offshore, banga party, Zcash or the private. No, we're past that stage. Right now, it's about where the chunk of next institution involvement. And for that, banking relationship meaning in this jurisdiction, you get a bank account, and how much is your reputation worth having that bank account? I wouldn't drill too deep into the conversation for here, but I just want to say that in Hong Kong, we cannot afford having a jeopardized or discount to the banking relationship, because historically, this is where we stand. I know for a fact that from decision makers very high in government, maintaining the financial center definition is top 1 priority instead of trying to make 5% faster than everybody else is running, because we didn't get here for knowing how to do business, right?
Right. So Rachel, you mentioned that one of the roadblocks from your perspective was actually the banks. So that's kind of external. How do you feel that the Hong Kong government and Cyberport are trying to promote this industry domestically to stay competitive?
Yeah, thank you so much. Actually, we have been doing quite a lot of different initiatives, initiated by the 50 million funding from the Hong Kong government in supporting a Web3 hub at Cyberport as well. So in the past few years, we have actually done various POC scheme, pilot schemes, and so on to increase industry adoption of digital asset, and also to create some benchmark use cases. So for instance, last year, we also launched a blockchain and digital asset pilot subsidy scheme, which we're very grateful that it was also included in the Hong Kong government digital asset policy statement 2.0. And we also have some great reaction from the market with over 200 applications, and we finally approved 9 of them, and they span across different RWA underlying assets and payment infrastructure and so on. And on the RWA side, we also see some innovation in, for instance, not just tokenization of money market funds, but also some experiment on, for example, KYC, DeFi, protocol for enhanced liquidity. Mm-hmm. So I guess these are some of the things that we could further look at. And also the SFC recently mentioned about on the secondary trading of tokenized asset side, and potentially on margin trading, and on the potential of derivatives perpetual futures and so on. So hopefully all these add together could enhance the sustainable development of the market.
Okay.
Thank you.
Julia, you've been here in Hong Kong for how many years?
Around 40.
Okay. So I'm going to ask you the next question, because we're going to circle back to what you mentioned before, which is the dragon in the room. But before we do that, I want to talk about a perception, because we're talking about PR, press versus reality on the ground in all of these markets. You mentioned the catchphrase superconnector. And you have seen what people say the before and the after effect of COVID, where there was a lot of global talent that had the traditional financial services industry, and it's been replaced by a lot of bright young talent from the mainland. How do you see the difference now between the competitive level? Is it still a global city, or is it an international city with very strong capabilities? And what do you think, where's the gap, if any?
I guess you could ask whether Hong Kong had ever been an international city. I don't think it's changed. I don't think it's less of an international city than it's ever been, actually. I think that there were two things, of course. There were the 2019 issues, the national security law, and then there was COVID. And the effect of COVID was, I think, short-term. People left, but as you say, a lot of talent was replaced. But I think the much bigger shift is the geopolitical one of how interested the West is in investing capital through Hong Kong. And my observation, and I think the world's, is they are very interested again. This market raised the most IPO funds of anywhere in the world in the past year. So I think Hong Kong is very much open for business, and all you need in a market is a short memory and a rising market. And I think the infrastructure issues I raised, which are small, I mean, they're more to do with pushing through legislation, are massive. And I do take issue with something Irina said, is that UAE would list RMB stablecoin. I doubt they would list something which the mainland government had specifically outlawed. That would be a very brave government that would do that, actually.
I've got to let Irina respond to that. I can't let that sit there.
Nothing stops you from applying for it, right? And if you have access to the liquidity of that cash, why not?
You would need PRC legal opinions, which you wouldn't be able to get.
Which I don't have.
Now, Irina, I wonder, we hear a lot about the competition, but then on the flip side, because we talk about the talent, it seems like, and I've heard this when I was at ETH Cannes, they said the difference is that that the Middle East pays for a lot of talent to come and start up new projects, and so you get a lot of hype around the projects, whereas Hong Kong has the infrastructure and the experience. How would you respond to that?
That Dubai doesn't have the infrastructure? Sorry,
that Dubai is trying to acquire it externally, but doesn't quite have it there yet. Would you say that you're there yet?
Well, I think when it comes to infrastructure, whether it's the financial rails, whether it's
specifically, sorry,
whether it's financial rails, whether it's fintech infrastructure, UAE is doing fantastically, and they've I can't think of things we don't have.
In terms of the volume of trade and the volume of investment in this space?
We have 80 regulated VASPs, so the largest crypto exchanges are headquartered in Dubai. And there was a report came out like literally a couple of days ago. It was something like 30 billion quarterly, the trade through those 80 regulated VASPs. Don't question me on the numbers. I mean, I went to law school, so I don't do the math. That was the whole reason. So the numbers was just astonishing. But my colleague is in the audience. Zaina, please have a look. The volume of trade is just absolutely astonishing. Binance headquartered in Abu Dhabi. Bybit is headquartered in Abu Dhabi. Which largest crypto exchange is not operating in that part of the world? Financial markets are now talking about listing tokenized securities and tokenized bonds. The infrastructure are there. We have 3 exchanges. Whether there's a question why does a small country like UAE need 3 capital market exchanges, that's another question. But
it creates a great competitive dynamic within your own market, though.
And that's what the CEO of the Dubai financial markets, for example, mentions when I specifically ask him.
Something Hong Kong could probably do with, actually.
Specifically asked why do we need 3 markets, and he says it's all about competition, because if we had one, we'll be napping half of the day and the other half of the day we'll be drinking coffee. But now we have 3. We have to compete amongst each other. We have 2 financial free zones under common law, under English law, directly applying the common law, which is fantastic. Me being a common law qualified attorney, it's absolutely fantastic. So why do we have 2? Because they have to compete with each other. So one is not drinking coffee half of the day or napping half of the day, right? We have 45 economic free zones, so each economic free zone competes with the other. If we had one or two, according to their own admission, they'd be napping, and now they have to be on their toes, agile, 24/7, fighting for direct foreign investments. When an entrepreneur or a founder comes to the UAE, they have such a huge option where to incorporate, where to get licensed. We have 5 regulators. We have 5 virtual asset regulators. Why? Because we're a federation. We're not a republic. So there are federal regulators, there are local regulators within the markets, there are regulators within the financial markets. So we have such a competitive environment, and even local authorities compete with each other. So when it comes to the infrastructure, or the question, does the UAE has infrastructure? We have such a minute infrastructure that we have to compete with each other.
Yeah.
And I would say yes.
It's I think those are all really valid points and a lot of data points there. I'm going to have to review that later in the notes, but well done. I'm thinking in terms of the ecosystem, because in China you have, as I said again, such a deep pool of talent that's coming out, and they're coming up with whether it's AI or fintech or even just RWA startups. There's such a deep pool of talent that it seems as though that's kind of a natural competitive edge. Pauline, do you want to? Rachel, would you like to address that?
Yeah, thank you for this. So we actually see this as an advantage in Hong Kong as well, since it's so close to mainland China, that actually a lot of the digital asset companies, they may have developers in mainland China, and they could have, for example, their founders or some of their senior management in Hong Kong and so on, and potentially part of their development team in Hong Kong as well. So these are some of the models that we see a lot of companies adopting, be it for them to be headquartered in Hong Kong or elsewhere. So, and also because of the policy, as Julia also mentioned earlier. So a lot of teams actually, their key operation, especially their founding team, could be in Hong Kong or other parts of Southeast Asia and so on. And they still have their development team in China, and I think it's a great complementary sort of force between these different regions.
You raised a very good point, and this is where we're going to come back to the dragon in the room. I came here, I'm very bullish on Hong Kong, otherwise I wouldn't be here with my company, I wouldn't be located here, and as a tech specialist, I'm obsessed with all things happening in China, because it is, I would say, arguably the world leader in emerging technology today, which explains why people like me and so many others spend a great deal of time in Shenzhen to keep our ears on the ground on Asia's Silicon Valley. But I still wonder, when it comes to that duality, on the one hand, we all love the fact that, that Hong Kong is part of Greater China, but then from a regulatory perspective, Hong Kong is part of Greater China. And that's the dragon in the room, I think, is that, when it's convenient, and I'm going to play devil's advocate here, that's my role, but when it's convenient, then we're part of China. When it's inconvenient, we're not. How do we manage this? Because on the one hand, we see that situations like Meta was going to purchase the startup Manus in Singapore, and then people said, well, they went to Singapore to be domiciled in Singapore so that they could attract international investors. And even then, there was the question as to whether or not Beijing would object. Another similar thing is the whiplash between the announcement that Baba and JD were going to issue their own coins, and at first it was allowed, and then it wasn't, because it's potentially a shadow currency. So the long arm of the law is potentially both a good thing and a bad thing. And this is when I said, international versus global. Are we an international player that is reaching out to the world, or are we a global player that's looking to be interoperable on the world stage?
Well, perhaps I'll jump in first. I would say this is quite normal for Hong Kong. It's always lived in a state of complete schizophrenia as to what's happening. Everything's always been about to end, ever since I got here 40 years ago. And I just think this is one great big new opportunity that we're going to have to look at. And does it raise all sorts of obstacles? Yes. Are we going to be able to overcome them? Well, one way or another. I'm seeing a lot of US, actually, deep-pocket investors in Hong Kong this week who are looking at opportunities in this market because there's a big perception there are some. There's also a number of traps and pitfalls, I have to say, and regulation in Hong Kong tends to work relatively well for international investors, so it does retain an edge on that. Still has common law. Costs, huge pressure on costs. So from a founder point of view, services, general costs are getting cheaper, not so great for banks and service providers here. I mean, that's dynamic competitive pressure from China. And some of my staff have moved to Shenzhen, actually. They commute every day here to Hong Kong to work because it's so much cheaper here. So I think, is it difficult? Is it schizophrenic? Yes. Is that any different to how it's ever been? No. It's just a different set of challenges.
I totally agree with Julia. I think it's the real estate price is rather a visibly larger obstacle than anything you described. I think for founders, international founders here, let's not worry about things that's not concerning your development, because when in the mainland, large corporations, they have their own restrictions, they have their own considerations and their own choices. Even if you talk today about the AI camp, from the Western AI camp, from this part of the world, the whole technology choice, infrastructure choice, operating system, referencing, the LLM choice is different. So you can't say, oh, I would like to, completely disregard the open source, this part of the world, or the LLM and the full stack of possibilities. I would like to only go west for my AI infrastructure. I think nobody could afford in this very global world to ignore this part of capability and possibility, given the huge manufacturing capacity we have in Shenzhen. Think about you building your next IoT, you're building your DeepIn, you're building your humanoid. You could say, oh, I'm not interested in Shenzhen. I will not pay a bill. I think if you said that, I personally think you're crazy, right? Having said that, each founders make their own choice about how to maximize your opportunity, your cost stack, your data. In Hong Kong, I just want to add, overall, this is a one country, two system. I would personally appreciate the very relaxed, it's definitely not a professional word, the very easy, tax regime. Nobody ever chased me for my tax. I was late 2 weeks, okay? So nobody get that in France, in the US. It's a completely different DNA and different culture. On top of that, consistency, crypto projects, Web3 projects come here. If we reckon they're honest people, that seems like doing okay things, we, as a government, we know we go to their parties, And unlike some jurisdictions, say, okay, offshore people out. But we never said that. Renovation, innovation, always be here. There's a lot of starting projects being here. Don't be the sucker that follow the narratives, and feel it out for yourself, both in terms of opportunity and in terms of culture.
Pauline, I want to just back that up by saying that I have personally been to Invest Hong Kong, and I found Hong Kong to be fast, transparent, efficient, and supportive in terms of facilitating small businesses get up and running very quickly. So I think that one of the ways I would characterize doing business in Hong Kong is flexibility. Really, that not necessarily putting everything in the cart before the horse, but figuring out, adapting to what the market needs when it needs it. And in fact, from a regulatory perspective, compared to the rest of Asia and indeed the rest of the world, Hong Kong legislation is incredibly competitive, especially given its deep and sizable financial services market and history. Rachel, anything to add to that?
No, I think Julia and Pauline already addressed like most points. So just I guess as they also mentioned, there's always like new opportunities, and we also see that they're increasing like companies, including payment companies. Even there's still a lot of gaps on the in the payment regulation. We actually see a lot coming in through to Hong Kong and set up here in the past few months, which is interesting to me as well. Yeah.
I actually have to ask you both one question, because the one, more than maybe UAE, it's almost like everyone's asking you about your sister. How's Singapore? So if you were to compare yourself, since there's nobody here on stage representing Singapore, if you could maybe just tell us how you distinguish the Hong Kong market vis-a-vis Singapore, what would you say?
Me, I would raise two words. One is potential, the other one is consistency. Potential in terms of the thing you could achieve just by being in this region and being in this deep capital markets, from the pocket of potential investors and potential partners you could reach out to. Consistency, I would like you to pay attention to, since the Web3 roadmap has established. You may complain things being slow, but we never flipped anything. And you can't say that in a lot of the regions out there. Thank you.
Yeah, I think I echo a bit on Pauline's point. So on consistency side, like actually a lot of people, they had doubts in the consistency of the policy of Hong Kong back in 2022 when they first had the virtual asset policy statement at the time. But I guess there are definitely questions as to whether it's moving fast enough and all that, but at least it's very consistent throughout, and we are progressing slowly towards a more like sustainable development as well. And on the other side, I would also like mention about like the size of the capital market. Actually, a lot of these companies on the digital asset side, when they come, it's more because they see a lot of like large asset managers and all that. They are all in Hong Kong and they see the potential. And I guess when like definitely like both Hong Kong and Singapore, they do act as like financial center, but in Hong Kong, definitely the capital market size would be a great sort of consideration as well. Thank you.
Awesome. At this point, I want to open this up to, we've got 10 minutes, and I'd like to open this up to questions if we have any from the audience. We see a hand there. Help. We could just hand them a mic. I can get another one. If somebody could hand us, there's a lady in the back.
Thanks. I just have a question about the HK investments. I just have a question. Is there any attitude about the RWA that is we just know HK policy is positive about the tokenization and there is very large market, especially international business in Shenzhen and China land. Also, so as we know, Singapore is also very
If it's helpful, you can also ask the question in
so
Chinese.
I just want to know, is there any other investments like or
Oh, I think she's trying to ask, is there any more favorable access to Western capital in RWA investment? Is it private credits? Is it private equities? Or is it money market fund maybe? What is a Western appetite on RWA investment is like?
I'll take a crack on that. That's eyes on the prize. That's the right question to ask, right? Hong Kong has always historically been home to innovation in Asia asset classes. I was on a team of issuing the first dim sum bonds, et cetera, the part of the history. Now, the million-dollar question is, in the tokenization age, in this part of the world, what is a innovative and next stage of good assets that will catch global interest? My personal opinion is it gotta be having something to do with fintech, digital payment, digital things that's traceable digitally, and things that's embedded in an intrinsically growing industry. For example, e-commerce. For example, content creation, e-commerce, supply chain financing. Because from the standpoint, I look at companies, a lot of them over the past 2 years from China, in credit tech, for example, 6 listed company in NASDAQ out of this region, average 2 billion of market cap, much bigger, different kind of credit tech companies otherwise. If you compare that with Japan, Korea, Southeast Asia, so many advantages, fintech companies, digital fintech, I'm talking about classic, traditional fintech companies, they are ready in terms of data, experience, scalability, execution with clients, the reading of people behavior, experience even in new markets in Southeast Asia, in South America, in Africa. So I see these people, and these people are almost ready to wrap something interesting and good yield. I wouldn't say it's ready 15 months ago, but the past 6 months I've seen things that's really interesting. For me personally, that's as my taste as a financial professional. I think that's a characteristic to this region, and I do feel it's coming up. I mean, you may call it a form of, I don't think it's that specifically. It's innovative form of financing.
And are there any announcements that we can expect over the next year coming from Hong Kong about anything opening up or changing? Any new legislation in the pipeline that we should be looking out for?
I would encourage everybody to pay attention. I don't know what specific area you're looking at, but do pay attention to a custodian and broker-dealer license. I personally think it's a very good, suitable, lightweight alternative to VATP, and that enable a lot of businesses with clients to dig into digital and virtual assets. But when you do digital, it's very flexible. There's a lot of things that could be digital.
We have one more.
Recently, mainland China government just forbid the stable coin. So will Hong Kong government be curbed and restricted furthermore by Beijing administration in terms of RWA development? Thanks.
Sorry, are you asking about stablecoin or?
I mean stablecoin, yeah, because mainland China just forbid that. So will Hong Kong government be restricted furthermore by Beijing administration?
If you come last year, October, November, which is close enough, right? Everything already happened, to our Fintech Week, which is a flagship and policy setting largest event in Hong Kong that's organized by my team. The vice chairman, I think, should we call it vice? The vice CEO of PBOC was here, and the first line he gave us is, please work out something around tokenized deposit in Hong Kong. We have a huge hope for you, right? So tokenized deposit is the cousin of stablecoin, and by the way, stablecoin is still rolling out Q1, sometime around that in Hong Kong. So to your question, no, it's still ongoing, and you have more vehicles to work with. In fact, if you look at the Hong Kong MA website, the project ensemble is an aggregation effort to showcase use cases in digital form of money that would include stablecoin and Project Ensemble RX is dedicated to digitize tokenized deposits. So I would say open up your eyes about different form of digital payment, because in the end it's all on chain and it's just in one other possibilities.
One more question here, and then I think we're going to see.
Thank you very much. I do have questions for Irina, because I've been following on the latest updates between Dubai and Hong Kong. We talk about the competition, but let's talk about some kind of probably constructive interactions. There are quite a few very active Web3 players currently based in Dubai. They were in Hong Kong a few years back. For example, one of the co-author of the Arabian Crypto, the book mentioned to you too, written by Charles Dossé. Charles Dossé.
He's my favorite client.
Yeah, and also Jamie DiBiasio. Quite a few of them. This is the second book they wrote. The first book they wrote, it was actually about the Web3 people based in Hong Kong called BlockCon, if anyone read it before. Given now there was some kind of changes in regulations in Hong Kong, do you think there could be any kind of a very positive interaction between these two cities in this area, and how these two cities can build the synergies or anything kind of collaborations rather than just competitions within it?
And I implore you to start working on the synergies, or anybody who is listening to this. We actually agreed a few synergies just sitting in the room. I don't believe Web3 is such a small place, like the pie is so small. The only way we can increase the pie and the only way we can bring more users, bring more projects, if we collaborate, what can be done here but cannot be done there. Let's collaborate, let's build the bridges, let's see how the government level can be done as well. Because, for example, VIRA regulator was here. I'm sure you would have so much very constructive conversations to be held with our regulators, our financial free zones. The book that you mentioned, so I was in the Arabian book, absolutely, delighted. Gifted this book to all my grandparents. They're like, thinking it's exciting. So I implore everybody to build bridges, to build cooperation, because this is how we grow in Web3 space, by partnership, not by competition. So any of my hyping Dubai was not because I want to compete with Hong Kong. I love Hong Kong. I mean, like, your food is 10 times better than ours and 10 times cheaper, which is amazing. So I really love our market. Just talking about the volumes, we did $650 billion of virtual asset trade just in Dubai last year. Just Dubai, we're not talking about other zones. So we have a lot to give, to share, and Hong Kong has so much to give and so much to share, and you have your capital. I mean, who can compete with the capital formation capabilities that Hong Kong has? I think very few markets can. So we can collaborate, and I think we should. And I think
we only talk about
Absolutely.
We only talk about competition because Catherine asked us to. So we're actually good friend my team personally seriously take a delegation of 60, 70 people to visit Middle East every year in person. So it's all good. I think really nobody should believe in segregation.
I can truly say I've never looked at a virtual asset structure that involved one jurisdiction. It doesn't exist, right? So, and particularly between, I think, UAE, Hong Kong, there's enormous synergy.
All right, I want to just clarify that the regulatory clarity, I think, that we're seeing, not just in Hong Kong, but also UAE and across Asia in particular, is a lot faster than the United States and Europe. And so that's one of the reasons why the industry is growing so quickly here. But naturally, people do start to compare different markets when they're thinking about where they should invest, where they should open offices. And those are some of the early questions that I get as a regional advisor. And so I wanted to air those out here so that you could hear from the experts themselves about what the relative advantages are, what the deal flow is, the types of investments they're seeing, so that they can show for themselves what the many things that Hong Kong and Greater China have to offer to participants in this industry. So you can always ask them more after this panel. I'd like to thank everyone on the panel for participating today. It's been a long week.